Hi, my name is Roger Schluter. This video today is really how the cash method of accounting can really hurt you if you're going to borrow from banks. And, this video will really show you why the cash method of accounting, method can hurt your ability to borrow from banks. And then also it really will show you how to get financing when you are using the cash method of accounting. There are actually two methods of accounting that most small businesses use, and really the most popular method is the cash method of accounting. A lot of times if you're using a Schedule C on your personal account, and that can be an LLC, it could be fully protected. But if you're using the cash method, which a lot of them do, it tends to push, if you're a rapidly growing company, it tends to push those sales and those earnings into the future. So if you're a rapidly growing small business, a lot of times it does help you, to say it behooves you to go ahead, and that's an awful big word for me. And anyway, it would behoove you to go ahead and use the cash method of accounting to try to push those profits into the future, and maybe even into another year. The cash method of accounting does not recognize sales or expenses until those sales are made and until those expenses are paid. So anyway, and that money, the money for the sale is actually put into your account, or the money from the expense is actually taken out of your account. This is great for small businesses, like I said, because the cash method of accounting pushes taxable income and expenses into the future, and it is really accelerated if the small business is rapidly growing. The cash method hides basically the two things that it hides. The biggest things it hides is accounts receivable and accounts payable. And that's because the cash has not been received or it has not been paid. The bank will not know, what amount may be hiding in accounts receivable. Or worse, the bank may not know what level of accounts payable, there are. They're a little more worried about accounts payable. If they had really, really large amounts of accounts payable, it could hurt the business in the future. They really worry that they could be so high that those hidden accounts payable amounts could actually put the company out of business. The accrual method of accounting is what most large companies use. They use the accrual method of accounting because it is the most transparent of the two methods. And it's the most accurate too. Banks like the fact that the accrual method is so transparent. The accrual method recognizes all sales and expenses. Whenever the company receives the money or not, whether the company paid the expenses or not. Banks like companies that use the accrual method, but are very leery of companies that are using the cash method of accounting. The small business using the cash method of accounting must continue to use the cash method for tax purposes if it really wants to kind of push those things into the future. But it needs to also do its books using the accrual method. In essence, you're doing or having two sets of books. Remember, the accrual method is more accurate and more transparent, so banks will like that method a lot better. The small business that will never borrow doesn't need to worry about it. They can keep using the cash method. If you're not going to borrow, there's really no need to use the accrual method if you're using the cash method of accounting. But a company that needs to borrow as it grows, and most companies do need to do that, we'll find the banking sector very reluctant to lend to a company that uses the cash method of accounting to do their financial statements. And that reason, was given above, that they just don't know what that accounts payable is. Accounts receivable is not as important, but the accounts payable, really, they want to know what it is. So anyway, doing two sets of books has a negative connotation in business. I mean, you hear about companies that, they would cook the books, and, they would lie using, large sales and large profits, but they weren't real. And that's what they'd have on their one set of books, and then the other set of books would have their actual, what they actually did. So it has a negative connotation, but doing two sets of books is perfectly legal. You can report your profit and loss to the IRS using the cash method, and also do the accrual method to report, to banks and business partners. You're using the same numbers. You got to remember that. You're not using different numbers. Using the same numbers. It's just the accounting, the way you're doing the accounting pushes some profit into the future if you're using the cash method. Now, the cash method can save you in taxes paid. The accrual method does really two things. Number one, you know where you're at financially. It's very transparent. Number two, you can be accurate and transparent to banks and also to other business partners. This could be investors, or it could be people that have some other vested interest in your business. The cash method of accounting is your baseline of activity, so to speak. By only recognizing cash, you're ignoring many sales and expenses that can add to your profit or that can add to your losses. There are two main categories that are ignored when you're using the cash method. The first one is accounts receivable. These are sales made where the company has not paid you yet. Many companies will want terms or want to pay at the end of the month or at the end of a period. So a lot of times, they haven't paid you yet. The second one is accounts payable. These are expenses that you owe, but you have not paid yet. Sometimes this happens. It happens a lot in insurance. Sometimes it happens with other things where you get, there's even equipment salespeople that'll say, hey, we'll give you the equipment today and you can pay for it and we'll bill you in 90 days or we'll bill you in 6 months, depending on how bad they need the business. Usually it's done, in a 30, 60, 90 day, period. But a lot of times some of those companies will really say, hey, we'll build this stuff, in 6 months, and that's kind of a big deal, when they do that. So, but anyway, as long as your accounts receivable, the money coming in that's not there, covers your accounts payable, the money you paid but you really didn't pay it yet, you're in okay shape. If it covers it with a margin. To a bank, if you use the cash method, they're thinking your payables could be very, very large, and because they're hiding out of sight, they can't see them, so they get really worried about it. So anyway, you got to remember the reason to have two sets of books. Number one, cash method of accounting for tax purposes. It will push basically it'll push the profits into the future, so you don't pay tax on them, or at least you don't pay as much tax. And then the second thing to remember is that the accrual method of accounting is really for transparency. And if you want to borrow from a bank or financial company in the future, they'll want to see the accrual method. So anyway, thank you very much. That's the end of the video. If you like this type of content, I hope you subscribe, and I hope you hit the bell notification for future videos. And if you got anything out of this, I hope you hit the like button. And, my name is Roger Schlater, and I will see you in the next video. Thank you very much.